Okay, dear students, so now we are moving towards a question of pre-mock December 25, and that is inheritance tax. Some students requested me for this inheritance tax question. So on the request of those students, we are doing this. So we have Byron died on 15th of Feb 2025. This is the date of death. Always I say this is important date. Date of death is important. He made two lifetime transfers. Lifetime gifts are normally PET, potentially exempt transfer, and CLT. Okay, now let's see. So one is on 10th May 2015, 10 years before the death. 10 years. This PET is 10 years before the death. And this is 8 years before chargeable lifetime transfer, and they are saying the Byron paid the donor paid the lifetime IHT on CLT. Hope you remember the rules. When donor pays, okay, so it's going to be 340,000. Now the next thing they are saying, this is the information of death state. Now please, Byron's death state was valued at 1,250,000. This is the value of total death state. This included his main residence. Now, hope you remember residence nil rate band. Residence nil rate band. There was a topic taught in the class as well. So, when can we claim residence NRB? Residence NRB, which is 175,000. So you have in this there is a main residence of 350 on which there was an outstanding mortgage of 100,000. So whenever there is a residence, whenever there is any residence, and in the question it is given that a particular loan is attached to that residence, then you need to net off. So what is the net amount of your main residence? 350 minus 100. See, this outstanding loan belongs to your main residence. Okay, so technically your main residence is 350 minus 100, that is loan. Okay, so your net amount of main residence is 250,000. Don't forget this. Okay, now the whole estate was left by Byron's daughter Sophia. Okay, so yes, we are eligible for residence NRB. Why? How? First of all, the person must died after 6th April 2017. The person must died. If you want to claim residence NRB, the donor must die after 6th April 2017. So this Byron died on 2025. So the first condition is okay. The second condition, remember, see the video. It should be inherited to direct descendants, like father giving to daughter or son, or grandparents donating to daughter or granddaughter, like this, not to brothers and sisters. Okay, so yes, it is clearly written that it is inherited to daughter Sophia. Right now, Byron's wife Aisha died on 20th March 2010. She had made no lifetime gifts and left her entire estate to Byron. Now what does it mean? It means no lifetime gift. She made no lifetime gifts means complete NRB was unused and left her entire estate to Byron. So that means the wife transferring the wealth to husband, so it's totally exempt. That means at the time of death of this lady Aisha, no NRB was used. No NRB, no residence NRB, and no normal NRB. So all this normal NRB of 325,000 and residence NRB will be transferred to the husband, and this at the time of his death he can use it. Okay, right? So you hope you remember the transfer of nil rate band from husband to wife or wife to husband. This topic will also be applied here. The NRB for the tax year 910 and all subsequent tax years was 325. Yes, we know this. What was the gross chargeable amount of chargeable lifetime transfer on 20th August 2017 for the purpose of calculating any additional tax due on Byron's death? Okay, so the first question is linked to this part. Linked to this part. Listen, first of all, keep this thing in mind that the person is alive right now, not died. We are right now in 2017. Just think, right now we are in 2017. The guy is alive, the donor is alive. Okay, so if the donor is alive and he is giving any gift to trust, he is giving any gift to trust, by that is CLT. Okay, so in the year of CLT, you need to calculate lifetime IHT on CLT. In Urdu language, I used to say pehli kist. Remember in the class? So we need to calculate lifetime IHT on CLT. Let me do it. Now, wait. The amount of your CLT is 340,000. Okay. Now listen. First of all, the person is alive. The person is alive. So don't even think about residence NRB. I always think about normal NRB. Residence NRB is only for death state and for main residence and all. Leave it. So normal NRB, it's always 325,000. But you know, there is a topic which we call 7-year accumulation principle. From the date of gift, you look back 7 years. From the date of gift, you will look back 7 years. Is there any tax calculation in 7 years? No. Why? As a student, you may say, sir, in last 2 years, there is a PAT, that is a potentially exempt transfer. In last 2 years from 2017, this CLT was made on 2017, but there is a potentially exempt transfer in 2015. So my dear student, if you look back 7 years, on potentially exempt transfer you don't calculate any tax. When the person is alive, you don't need to calculate any tax on potentially exempt transfer. That means in last 7 years NRB was not used at all. NRB was not used at all. Okay, so your NRB was unused, so complete 325,000 will be used here. So 340 minus 325 is 15,000. Now you tell me, who is paying this lifetime HT. See, it is clearly written Byron will pay. That means the donor. So in this case the tax rate will be 25%. So 15,000 multiplied by 25% is 3750. 15,000 into 25% is 3750. Okay, but now you tell me, they are asking about the gross CLT, the gross CLT. So what is the gross CLT? See, the value of CLT is 340. So first of all, listen to me. This is the way I taught you in the class. First of all, donor give this gift, and then the donor put hand in the wallet and he paid the tax also. So that means we need to add both of them. So it's 3750. So if you add both of them, 343, this is your gross CLT. Okay, and now afterwards, once you have calculated this amount, now in future if he died within 7 years, then this is the value on which we will calculate additional IHT on CLT. 343750. 343750 is the number on which we will be calculating additional IHT on CLT. This is the answer. Not difficult, a routine thing. It's a routine thing. And yes, you are doing revision. Revision means you already know the basics. Next, now this is about true and false. This is about true and false. Number one, a marriage exemption of 2500 is available for a lifetime marriage gift to a nephew. No, 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 not nephew. If you are giving to son and daughter, then we have the big marriage exemption. For nephew is like normal people. So for others, it's only 1000. For others, it's only 1000. So this is false. See, it's written nephew. If an individual makes 5 gifts of 240, each to 5 different individual, these will, yes. If it is less than 250, if it is less than 250, you are giving to first person less than 250, second person less than 250, third person, yes. So you can give to as many people as you can, but the amount of the total gift during the tax year should be less than 250. Then, if a PAT is made before CLT but in the same tax year, the 3000 annual exemption must be used against the PAT first, even if it never becomes chargeable. True. Remember left to right. For example, it's your fiscal year. First you did PAT and then you did CLT. Okay, PAT is 5000, CLT is like 8000. So you will go left to right and your annual exemption will be deducted from this. Okay, remember, although right now you are not calculating any tax on PAT because PAT is potentially exempt transfer, but still, why did you give first PAT and then CLT? It's your mistake. Okay, so always annual exemption will be used from left to right. So yes, this is correct. Now, any unused annual exemption brought forward from the previous tax year should be used before the annual exemption. No, if you have a brought forward annual exemption from last year and you have current year annual exemption as well, so always use current year first and then last year. Always use current year first and then last year. So hope you remember these basic rules. Now, what is the maximum total amount of nil rate band and available to set against Byron's death state? Against Byron's death state, let me tell you. First of all, see, he died on 15th Feb 2025. Now just go 7 years back. If you go 7 years back, so it will be 15th of Feb 2018. Okay, 7 years back. Now in this question, all the gifts were lying here. The CLT was in 2017 and the PAT was in 2015. Hope you saw the date. Okay, so that means from the date, this is the date of death. This is the date of death. Last 7 years. See, last 7 years, no gift, no gift in last 7 years, no lifetime gift in last 7 years. So that means you're complete. I'm just talking about the normal NRB, because on normal NRB 7 year accumulation principle is applied. On residence NRB there is no 7 year accumulation principle. Okay, so for normal NRB of 325,000, normal NRB of 325,000, 7 year accumulation principle is applied, and from the date of death, no gift in last 7 years. Okay, so first of all, your normal NRB 325,000 husband, and yes, the wife, when wife died, she also didn't use any NRB, so wife NRB will also come here. So yes, 325 plus 325 This is 650,000. This is perfectly available for you. This 650 is perfectly available for you. Now let's talk about residence and RB. This guy was available, he fulfilled the condition for residence NRB, and residence NRB is 175,000 for husband and 175,000 for wife. That means you have residence NRB of 350,000. You have, because you fulfill all the condition, we fulfilled all the conditions, you remember, main residence, inherited to direct descendants. Now, 350,000 was your residence NRB, but there is a problem. Hope you remember the lecture. Can you tell me the value of your net main residence? Can you tell me the value of your net main residence? See, main residence value was 350 and there was a outstanding loan of 100,000 on main residence. Can you see? So 350 minus 100, 350 minus 100 is 250. 350, your main resident, the net value of your main residence is only 250,000. So your NRB will be restricted to 250. Your residence NRB will be restricted to 250. Okay, so yes, 250,000 for residence NRB. Now can you tell me the total NRB available? 650 normal NRB and 250 residence NRB. It's 900,000 total available. Total available is 900,000. Okay, this is the answer. 900,000 is the answer. Which two, only two, which two of the following amounts would have been deducted when calculating the chargeable value of death state? Now, chattels, listen, there is one thing which we call exempt assets for CGT purpose. CGT is a separate, capital gain tax, chargeable gain tax is a separate topic. For CGT, the list of exempt asset is different, but for IHT all assets are chargeable. Okay, for IHT everything. So yes, chattels will be included in the death state. Chattels will be, there is no deduction allowed for chattels, so this is not the answer. Yes, income tax. Yes, income tax you can deduct. Yes, it's a genuine liability. From the death state calculation, you can calculate your income tax. Yes, a debt of 5,000 owed to us is not legally. No, verbal promises are not allowed. Hope you have taken the classes. Verbal promises are not allowed. Like for example, you have promised somebody that I'll help you in future. No, no, such the value of no, ISA normally for income tax ISA is exempt, but for IHT purpose it's not exempt. Yes, funeral expenses is allowed. Funeral expenses is allowed. A fee of 900 paid to personal representative, no executioner. The personal representative is also called the executioner. It's not allowed. Personal representative fees is not allowed at all. Not allowed at all. Okay, so what is the answer? This is your answer, and these two expenses are allowed. These two deductions are allowed. Now the last thing, in this last question part, they are saying identify the due date. Please identify the due date for payment of IHT on Byron's estate, means death state, and who will be responsible for paying it. Very easy. You know, for death taxes only one due date. For death taxes only there is one due date. For death taxes only one due date. What is the due date? 6 months from the end of the month in which the donor died. 6 months from the end of the month in which donor died. For all death taxes. All death taxes means IST on PAT, additional IST on CLT, and IST on death state. All these. But they are asking only for death state. Okay. So the due date is from the end of the month in which donor died, 6 months. Okay, so donor died on 15th Feb, so just end the Feb month. So after Feb month you have March, April, May, June, July, and August. So 31st August, see, this is your due date, this is your due date. And you have read the book, you have read my notes, or you have taken the classes. For death state, the personal representative is responsible. So the personal representative is responsible, to pay tax on death state, and the due date is 31st August. So this is the answer, this box is the answer, this is your answer. Okay, but one thing I would like to clarify you, although death state will be paid physically by personal representative, but the burden of this tax will be on Sophia, because now Sophia will ultimately receiving the net amount. This tax will also be paid from the state. So automatically Sophia's wealth will be shrinked. Okay, right? So dear student, this class is for motivation. See, we can do it. Although, okay, if you, out of these 5 questions, if you miss one question, if you do wrong one question, still 4 questions you are scoring 8 marks. Okay, so think this way. And these days are very, very important. Again, I'm telling you, do non-stop practice. Mock exam is must. That's why we are doing here pre-mock. Okay, so thank you and take care. Bye bye.